What does a low volume spring look like? Well, you see a breakdown in volume. It gets out of the trading range and it gets knocked out. But the critical detail is that it happens on very low volume. So that low volume actually indicates that there's a lack of selling pressure. Think that the floodgates have been opened, but not much water is going through. There's not pressure pushing it through. And that's because the mild breakdown says that the sellers are not committed. So David Weis says the low volume reflected lack of selling pressure, which contributed to the small penetration. This is similar to a volatility contraction pattern. We all know that price tightens. We get the coil, we get the compression, whatever you want to call it. We see that range shrink. The volume dries up, the selling is exhausted. This happens in a similar way, but it can actually be quite explosive when it breaks through that trading range. So when you see those narrowing price ranges, especially on a monthly chart, the stock's all lined up on a springboard, similar to a VCP, and it's ready for a much larger move. But what we want to do is have some cues. We want some signals for an early move. And this is where the spring comes in. It can actually seem like this whole setup just gets broken down and it's about to fail. But this is the key part of the springs. It actually shows us that it's not failing, it's actually primed. And that's where we get lined up. And quite often we get entered just as it's re-entering the price range before it shoots up sky high. So it's a really great signal to understand. We've got a whole tutorial where we walk through the whole theory of it, how to identify the setups. We've got ASX examples. So if you're serious about trading, you want a systematic edge, click on the video link below and I'll see you there for the whole walkthrough.